So today's episode is answering a question on how to buy over the counter. Okay, for clarity, tax deeds are a method that the county uses to confiscate the property and then resell that property back into the marketplace. So the county will confiscate the property for someone that hasn't paid their property tax. Now, I'm not going to go through it in depth, but the legislature passes the rule, property owners must pay property tax. All right, that's the same in all 50 states. Property owners must pay the tax. It's the law. You see those little white circles? That's how many auctions are taking place within that state in the next 90 days. This calendar updates every single day. I'm here today to show you how to make money. To do that, I'm going to show you briefly that there are thousands of tax defaulted real estate properties across the 3,000 plus counties in the United States. This is quite interesting. You're looking at the Ted Thomas Magic Interactive Map and Auction Calendar. It changes every day. Now, I created the calendar and the map so I would know how many auctions are taking place every day in the United States. Now I can show the little guy how to make money. Most importantly, I created this system so I could have an auction list for each auction 24/7. All right, now the legislature makes the rules, but once they make the rule, they push it down to the Board of Supervisors and county commissioners, and those people then have the job of enforcing it. So who ends up enforcing it? Well, it's going to be the treasurer. And the treasurer, if you don't pay your property tax, is going to send you many notices of default. Now, many of those notices will come to you. If the person doesn't respond, the treasurer is then going to confiscate that property. And when I say that, they'll seize it, and then they want to seize it for one reason only, because they want to auction it.
All right, ladies and gentlemen, let's get her going here. Start me off. Where to bid to go? Have it $1,000. Open it up.
So they can make enough money to pay those property taxes. All right, this is a public auction. Anybody can attend that auction. When the auction takes place, the treasurer is going to wipe out the mortgage, going to cancel the mortgage, delete the mortgage, or the deed of trust loan. So now the auction is going to take place. They're going to try to sell the property at a low price, by that I mean 10, 20 cents on the dollar. That's all they want. They just want to collect the property. Now, I don't know that the property will sell for 10 or 20, but they're going to start the auction there. But it could go up because the highest bidder wins at the tax defaulted property auction. All right, so all the properties will start at low price because the treasurer tax collector is trying to get the money to pay the back taxes. They want the tax money. They want that revenue so that they can pay the county's bills. All right, so the treasurer's objective is to collect delinquent taxes. It's not to end up owning property. Now, when they collect delinquent taxes, that revenue is going to pay the county's bills. So that means the treasurer is selling at low prices. Now, the property might have a tax assessed value considerably higher. So it's not unusual to see properties sold 60%, 70%, 80% less than the tax assessed value, because the treasurer is going to motivate people to come to the auction by starting out with low prices, which are going to be very close to just the back taxes that are owed on that property. The property will ultimately be sold to the bidder that pays the most money at the auction. And the mortgage and the deed of trust loans both will be cleared off the property. That means they'll be wiped out and they will be deleted. All right, now what are you going to do with the property when you get it? That's important. So you need to ask yourself, what are you going to do with this slightly used property? All right, would you buy a property if you could get it for 10 or 20 cents on the dollar and then maybe resell it by putting a sign in the front lawn, or sell it on eBay or Craigslist or Trulia or multiple listing service? Any one of the ways you want to sell it electronically, you could do that. So what if you could buy it for 10 or 20 cents and sell it for 50 or 60 cents? Would that work for you? Well, who would you sell it to? How about a fixer-upper guy or gal that wanted it? How about a property renovator that likes to take a mediocre house and make a mansion out of it? Or how about those property flippers? They don't try to create any value. They just want to market it. So they're going to buy it and put it back into the market. So there's plenty of places to sell it. What are we covering on this particular episode? How to buy over-the-counter tax deeds. That means tax defaulted property. What are they and how does it work? Well, it works very simply. The county has tried to sell these properties and they're not able to do it. So the county needs money. And the money they need, they're going to use that to do what? To pay the county bills. All right, now people have all kinds of different ideas about this business. I don't know where you are. I don't know whether you're an entrepreneur, whether you're a new investor, but if you dreamed about making some money, then this is probably a good way for you to start thinking about doing it. So entrepreneurs, one of the biggest reasons is because they want to make money or they want to be famous. Probably do both of that doing this business. All right, to understand how this process works, we understand the county needs money. They want revenue to pay the school teachers, the roads, the police department, the sheriff, the firefighters. You're getting the idea. They need money. So that's why they have the tax defaulted auction. So if they've tried to auction multiple times and they couldn't do it, what's the treasurer going to do? Well, they're going to have to do something. So the legislature has said, sell the property at an auction. Well, if they try to sell it in the auction and they can't get it sold, what are they going to do? So what they're simply going to do is they're going to remove it from the auction list after they've tried to sell it 2 or 3 times. They're going to remove it from the auction list and they're going to sell it over the counter. All right, now what does that mean? Well, they've already tried to sell it at regular auctions. It hasn't sold. So now they remove it and they're going to put it on another list. So the county will hold out as long as possible. Then they remove it from the regular list and now they're going to try to sell it over the counter. Problem is, most people don't even know there's such a thing as the over-the-counter list. So what is the over-the-counter list? Well, it could be called all different things. My experience has shown me that they use many different names, and that's probably why most people don't understand this. So this is where you really want to be paying attention. Over-a-counter means I'm standing at a table right now. That's the counter. They're going to sell it over that counter to anybody that walks in and buys it. Now, sometimes they call that a scavenger list. Sometimes they call it a leftover lands list. Sometimes they call it a surplus lands list. Sometimes they call it a forfeited lands commission. Sometimes it's a strike-off list. You're getting the idea. Here's what you need to know. You need to know that all 3,000 counties have tax defaulted properties they want to sell. If it doesn't sell, they're going to put it on another list. I don't know what they're going to call the list, but you can go to the county and find out. If it didn't sell at the regular auction, they will sell it over the counter. When you get there, is anybody else going to be there? Probably not. So you're going to get the property at the minimum bid. Would that be good to get a property at the minimum bid without a tax auction? So you're getting the idea. They first tried it at the regular auction. Now they're going to try it over the counter. Remember, I'm calling it an over-the-counter list. They could call it any list they want, but they're trying to sell the property after the regular auction took place. The properties are for sale. The county wants to sell them. Why do they want to sell them? They need the revenue to pay the county's employees. All right, now, this is where education comes in. I always recommend people get a coach if you can afford it. If you can't afford it, then you really should get a coach. I'm telling you, you probably need one because you don't know what you don't know. That's very, very important. Okay, now I'm going to give you an example because people that are watching these videos think we just make it up. We don't make it up. I'm going to show you an example of someone that purchased a property on the Forfeited Lands Commission list. Now, these properties have been marketed by the county. They've advertised them. They've tried to sell them. Now it ends up on the Forfeited Lands Commission. Most people don't even know that these properties can be purchased over the counter. So my former student, Bob, he purchased a property, a single-family home, slightly used, slightly abused, need a little bit of work, some paint and cleanup, a few minor repairs. What did he do? He had a handyman do all that, but the property had no mortgage. There was no deed of trust loan on the property. So what did he do with the property? Fix it up a little bit, and then he went ahead and rented it. Simple problem. He bought the property for less than $3,000 from the Forfeited Lands Commission. That was over the counter. He bought it for $3,000. What did he do? He rented it for a number of years, and then he sold it. When he sold the over-the-counter property, he just sold it into the regular marketplace like he always would, and he sold it for $102,000. Now think about what happened. Bought it for $3,000, rented it, and ultimately sold it for $100,000. Now that's the best case. I don't know that every deal is going to be that good, but you're getting the idea. You should be thinking about buying these properties over the counter if you don't get them at the auction. Most people don't even go look. All right, so this is just a glimpse of the spectacular returns that you could get on one of these properties. Now, I'll discuss this again and again in future episodes. I'm running out of time, so I need to ask you to think this to yourself. Are you learning material where you could earn yourself $25,000 and $50,000? You should be. This is the kind of business that you can make $25,000 and $50,000 on one deal. That'll take care of all your car payments, all your house payments, and even get you ready to go on a nice vacation because you have plenty of money left over. All right, remember, there's 3,000 counties. They're all separate jurisdictions. They're all going to have properties for sale. So let's take a look at the Ted Thomas interactive map. It's very simple, and you can see it being displayed right now. All right, now you just move the cursor over the state. All right, as soon as you're over the state, it will tell you how many auctions are taking place in that state in the next 90 days. So now you know how many auctions. Now you just click the mouse, and then it'll start taking you where what you really want is you want to know the details of different auctions. It will take you to all the details. Now, before I leave this, I want to mention to you, if you're going to buy properties at any auction or you're going to buy over the counter, you need to have boots on the ground. You need to look at those properties. There might have been a hurricane, there might have been a flood, there might have been a fire and it burned down. You'll want to know that. At the same time, you're looking around, planning your exit strategy. I'm Ted Thomas. I'll see you on the next video. Don't forget, request your free auction list right below me.